Hello everyone, this is Steve with the Free Bullion Investment Guide. Today is August 31st and I'm doing a review and outlook price analysis video for the US dollar. This is the US dollar's 4-hour chart. And to quickly review last week's video, I've been showing, well, I believe I showed you in my outlook for the US dollar, this descending channel, and I was pretty negative on the dollar last week. I did say that if we had a good GDP report, which we did, it came out slightly above forecast at 2.0%, and also if consumer spending came out better than forecasted, which it did as well, that could be could help the dollar rise, which it did. The dollar was in oversold territory last week in both the MACD and the RSI, and it clearly did a bounce. I was expecting it to continue to stay down. We may have seen, I was saying that we may see a bounce, but I was expecting it to continue in the descending channel, which it did not do. It completely changed directions and bounced to the upside, breaking all of these resistance levels and turning them back into support levels. Now, clearly, they're not very strong support levels because resistance levels, because had they been, they would have helped to slow down the dollar's rise. But 99 held out as the strongest resistance level for the dollar. So that's the reason why I'm changing these old resistance levels back to support levels. And they clearly just show areas where the dollar stopped rising and may have stopped rising in the past as well, or stop falling in the past, and that's what makes them support or resistance. Right now they're back to support, and 99 stands as strong resistance. But besides the besides the GDP and the consumer spending, there's really not a whole lot else holding up the dollar right now. As I've said in the past, we have an accommodative Fed, and we have also next week, actually tomorrow, we have the trade tariffs starting on China. I believe it's 10% across. I believe it's 10% across the board. It totals at like 300 billion or something along those lines. I don't have anything concrete on those numbers, but I believe I'm pretty close on them. But anyways, like I'm saying, we don't have much in positive news for the dollar besides what the GDP report and the consumer spending came out last week. Now, one thing though for next week that all eyes will likely be on, because it'll also help the Fed determine what they're going to do as far as likely cutting rates. But if it comes out, if the non-farm payroll report comes out better than expected on Friday, it will help the dollar rise, and it may change the Fed's figuring on cutting rates, but I can't see how that's going to happen with the trade war escalating, with the tariffs taking shape next week. So we should see the dollar fall in price. Next week we will see support at 98.50, as well as at the 98.38 level and 98.10, and so on and so on. So that's my outlook for the dollar. We should see it fall and confirm this rising wedge pattern sometime, I would say, before Friday. And then Friday, we'll see really this fireworks come out with the non-farm payroll report. And it will either confirm the dollar's downward movement, or it may change position and continue moving higher. But also, the dollar is showing overbought. It is in overbought territory in the MACD and the RSI. So that's it for this week. I thank you for your time. Take care, and God bless.